Hey everyone, welcome to another video. So in this video, we'll try and understand the major GST changes from 1st November 2025. Well, there are around 4-5 changes, but most importantly, we'll discuss two. One with respect to registration and the other one with respect to provisional refunds, both which are set to be implemented from 1st November 2025. So let's do a deep dive and understand these two important changes. The first one is a simplified automated GST registration process. Well, the issue with the current registration process is that one, it takes a lot of time. There are a lot of rejections coming into picture for registrations because once you apply for registration, there's a show cause notice, then you reply to it. And today the rate of rejections for registration is quite high. It is time consuming. On paper, it should take a maximum of 7 days only, but in reality, it's taking even more than 30 days. You have one more feature of Aadhaar authentication, which is a part of the GST registration process. Once you submit the application, you also have to do an Aadhaar authentication online on the portal. But for some reason, if that authentication fails, then the GST officer will come to your location, your proposed place, will check up your business, whether the building is genuine, and then he will take another 30 days for him to grant registration or sanction registration for you. So what should take 7 days will now take 7 plus 30 days if suppose the Aadhaar authentication fails. You also have these days a host of additional documents being requested by the GST officer to prove the authenticity of the ownership of the building and all that, which is not, these documents are not a part of the initial checklist for registration. And of course, the government today is concerned with the increasing number of fake registrations or bogus registrations. And because of all these issues, to bridge it, the GST Council at its 56th Council meeting on 3rd September 2025 brought about a recommendation or a proposal called a simplified automated registration process. And under this process, it is typically available to only small and low risk businesses, which are basically people who have on a monthly basis GST output tax liability of up to 2.5 lakh only per month, and that too on B2B transactions. So if I am a taxpayer and I am doing B2B transactions, business to business, and my GST in a month is not more than 2.5 lakhs, then I'll be eligible for this simplified automated registration process. Well, the beauty about this particular simplified scheme is that you will get automatic registration approved within 3 days, and your registration will not be looked at by an officer. Instead, technology and AI will come into picture and your risk profile will be analyzed, and if all okay, if you are a low risk businessman on the GST portal, then you'll be granted refund within 3 days and not the usual 7 plus 30 days and all that. This is a voluntary scheme, which means that you always have the option to not go for the scheme and go for the normal registration, which is more time consuming. So if you are a high risk business, which means that for some reason you have not been paying taxes here and there, you have been filing returns delayed here and there, or if you have output liability of more than 2.5 lakhs in a month, then you can of course, you will not be eligible for this and you can go for the normal registration scheme. And those who are eligible for the simplified scheme can also opt out and go for the normal scheme. As per the GST Council, around 96% of the applicants are said to benefit from the simplified automated registration process. Currently, it is clear that it is only available for B2B transactions, and that is how you look at the 2.5 lakh threshold and all that. But it could open up to exports, to SEZ supplies, to e-commerce operations and all that. But as we speak, end of October, nothing is there on the GST portal. There are no advisories, and therefore we have to await for detailed circulars, notifications, talking about this process and how this process is going to be implemented. Though the council said that it will be effectively implemented from 1st November, it is highly likely that it will be postponed to a few more days because nothing is right now structured up on the GST portal. The second most important change that will come into effect from 1st November is something called a risk-based provisional sanction of refunds. Well, refund, like registration, has a lot of issues, the current scenario, because for some reason it is extremely difficult to get money from the department in terms of GST refunds, because they'll also undergo audits and therefore they'll scrutinize each and every document, try to delay a bit, and therefore only grant refunds later. You also have the concept of provisional refund, wherein you apply for refund, and the law says that within so many days, the GST department is to provisionally sanction 90% of the refund amount to you. And this 90% is only available to those who are in the export line or those who are supplying services or goods to special economic zone units. Before we look into the proposal, let's understand the two common types of refund applications. One is by exporters. These are people who basically export out of India the services or goods, or you have suppliers to special economic zones, services or goods. So for these two parties, there is no tax on the outward sales or the on the outward supplies, because these are out of GST. But for whatever GST, for whatever purchases you make in terms of services or goods that you buy, for that anyway you'll have to pay GST, and therefore you have your purchase GST being accumulated because it has not been able to set off against your output GST. This accumulated GST can be received back into the bank account of the exporters by way of refund if you make an application before the department. The other type of applicants fall under the category of inverted duty structure, or IDS, wherein in your line of business, the GST rate on your purchase is 18%, but the GST rate on the same finished goods is only 5%. So you buy a lot of items for 18%, but you sell a lot of items only for 5%. So that differential amount, because of the heavy amount on the purchases, is lying accumulated in terms of input tax credit, which you cannot utilize because on your output tax credit is only output tax liability is only 5%. So this accumulated purchase tax can also be claimed as a refund by putting out an application before the GST department. Now, in the current scenario, for the applicants under the inverted duty structure, they are not covered under this 90% provisional refund concept because it is only available to exporters and SEZ suppliers. Now, the proposal, again by the 56th GST Committee Council meeting on 3rd September, brought forward a proposal recommendation wherein they said that the law will be amended to include inverted duty structure applications in this 90% provisional refunds. Earlier, it was only exporters and special economic zone suppliers. Now you will have applicants under this inverted duty structure also. They can claim refund for their accumulated credits. And this 90% sanctioning, to make it smoother, faster, it will now be based on data analysis and risk evaluation. Earlier, you had detailed checking, detailed feedback mechanism, detailed checking by the proper officers, by the GST officers. It took a lot of time. This provisional refund 90% was only on paper. It was never practically implemented on the ground. But now the proposal is to grant this provisional refund based on your risk profile, based on risk evaluation, data analysis. Therefore, this will not amount to any kind of detailed checking, which will be helpful for the applicants because they'll initially get their provisional refund of 90%. So if this proposal is very well implemented, liquidity concerns of the applicants will get solved, because once they put an application, they expect money to come within a minimum of 60 days. And currently that is not happening. So with this risk-based provisional refund scheme, refunds are going to flow more faster to the applicants. The liquidity position is going to increase. The criteria or the parameters on which the risk score is going to be assessed is not certain as of now because nothing is put out by the government, and therefore we are awaiting detailed FAQs, notification circulars, because as on date, like I said, for registration, even for this risk-based provisional refund scheme, there's nothing up and running on the GST portal. There's no advisories, there's no circular notifications. Even the law to include inverted duty structure scheme is not amended as of now. So therefore, this could take some more time. Not 1st October is highly unlikely. But again, the proposal is from 1st October, but this could practically see implementation only in the 2nd week or 3rd week of November. Well, I hope I was able to make things clear through this particular video. Well, if you like the video, you could show the support to us by hitting the like button. If you want more videos like these on regular basis through way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.